Good evening and welcome to a brand new show of Markets Tomorrow. After Monday's monster rally, Indian markets consolidated today. Stock-specific action continued and Nifty has inched closer to 7650.
Yes, it was certainly a little bit of consolidation, but let's talk about the road ahead. And for that, joining in on the show today, we'll have our three market experts. First up, Satish Ramanathan, market analyst, will be joining in. Sudeep Bandyopadhyay, president of Testimony Securities, and Sandeep Wagle, founder and CEO of PalmEyeWealth.com.
Look at Indian markets, and in terms of first the Nifty action was predictable. We stayed above 7600 for the better part of the day, and sectoral churn was clearly evident. Yesterday it was the early cyclicals, which is banks and industrials. Today it was metals, which is beta, and auto discretionary, which is autos. They managed to outperform. Dispatch numbers for the month of June, which have come out from Mahindra and Maruti, are impressive. That just seems to be endorsing the fact that Indian economy and consumer demand, they both are making a comeback. Hindalco was another star performer today, apart from Maruti, which today hit a lifetime high. CLSA continues to believe that things for Hindalco will continue to improve, especially for the global business. However, there was profit booking in large cap IT, marginal though. TCS, Wipro and some other heavyweights, they corrected on marginal volumes.
Yeah, but it was a different case when it came to the broader markets. Today, you did see them hold out, and in fact, it was the BSE mid-cap index which hit a fresh record high. Ditto was the case with the BSE small cap index, in fact, close to its record highs. But you did have some individual stocks also which held out very smartly. Take a look at a Saskin Communication. In fact, that one leapt to its 6-year high. It won an arbitration award versus Spectrum Communications, and from Spectrum, it will be getting $32 million towards royalties within the next 30 days. Punj Lloyd was active. Orders was 1,400 crores from the Kuwait National Petroleum Company. We spoke to the management, who said that the orders will be executed over the next 35 months, and most of the orders have been received from overseas this year. Alembic Pharma got a shot in the arm as CIMB initiated coverage with a target of 320. They expect a 19% revenue CAGR over FY14 to 16, and US growth will be led by R&D productivity and execution. So all in all, it was not a bad day for the broader markets, but Nikunj, there's really two ways of looking at it. At least the follow-up activity continued, but it wasn't with too much vigor.
It was not there for the Nifty, but individual stocks, I think, surely are rotating. So on a daily basis, one sector seems to be putting its hands up. Today it was auto discretionary, which is autos, and to a large extent metals, and that's what you want to say. You want all sectors to participate. You want all groups to chip in, and that is what is happening. The market undertone is bullish, and the market message, I think, is also bullish. We are not working with excellent set of global cues, but the fact that dip buyers are there, that just tells you the bent of the market clearly is on the long side, and it is no longer really on the short side, so to speak.
Yeah, that's really what we saw in today's trade. So let's get in our experts to find out what exactly they make of the market momentum. And Sudeep, would like to start off with you first. And we have seen follow-through activity. We're talking about individual sectors that really see a lot of action. Are you pleased with the way we're moving? Are we poised for, a further pre-budget rally?
Absolutely, Avan. I think, this is a classical pattern which is visible. Market is consolidating. Market is, moving from sector to sector. And we want all the sectors to participate. We were really worried about metals up to a point of time. And I think metals also have come back. I think to an extent this is on the back of what's happening in China. After 6 months, I think they have produced a PMI, HSBC PMI numbers came, which is very, very encouraging for China, and I think that augurs well for the entire metals basket. And that was a worry as far as Indian market and Indian markets were concerned. So we are comfortable. Auto has come back and posted excellent numbers. Maruti numbers are worth appreciating. So I think overall we are seeing a broad-based rally developing. Of course, there are a whole lot of expectations. There are concerns on the monsoon. There are concerns on the international oil prices. But by and large, the factors are positive. Market undertone is bullish. And I think we are heading for a mild pre-budget rally.
Sandeep, after yesterday's monster rally, Indian markets today have consolidated. The real action once again was in the Nifty. It was outside the Nifty. What do you make of today's price action?
Well, nothing much. I think whatever I agree with fully in totality with whatever you said, it is shifting of some stocks and sectors. I don't see weakness even 1%. I mean, this is what you expect after yesterday big rally. What we saw today was consolidation, but there was no weakness. I mean, I would buy into individual stocks. I would rather not take a call in the Nifty. Nifty may languish at 7,700 or so till the budget. I really don't think the bulls will let go. It will not give you a one-way move. Some stocks, some sectors here or there will move. Some will be positive, some will be negative. Overall, a balancing act. So you have to be very, very cautious in terms of which stock you choose for the day or for a couple of days. And that may not augur well with everybody. I mean, everybody cannot be an expert in choosing stocks. So that would be a problem for the next 7 or 8 days. But I don't see any bit of weakness, as I mentioned. And then post-budget will depend on the event. I mean, whatever said and done, I think 7,000, 7,200 should not be violated for the bull run to continue. And if you talk of the extreme short term, I am hopeful that even 7,500 will not be violated. So in that sense, we are on to 78.50 or so, which I think can be termed as the pre-budget rally. And who knows, we will be surprised if we go Nifty taking us to 81.50, 8200. Now whether that happens pre-budget or it happens post-budget, that I am not very, very clear.
Satish, what about you? Are you surprised with the kind of resilience we've seen lately? Because in terms of the concerns such as, Iraq or oil prices, inflation, monsoon, that's not really deterring the 7,600 level. It seems to be intact.
I think it's the carry trade coming through once again. We are seeing money coming in through P notes. It is volatile money. We should not forget that. But the times are good right now. Let's enjoy it before we start worrying.
Satish, clearly these are good times, but do you think good times are here to stay? That's a big question.
I think we are probably done in terms of the short term, because a lot of it was mean reversion in terms of valuations, in terms of margins, and expectation that growth will revive. It remains to be seen as to how the budget actually administers a growth dose to the economy. Growth without inflation is utopian, and how we balance the two is going to be key. And inflation is still very sticky. It isn't coming down. So we have to be a little careful about our expectations at the current juncture.
Sudeep, were you surprised by the action taken today? It seems like another bitter pill after fuel. You had the oil marketing companies which went ahead and hiked the prices of non-subsidized LPG. Lots of these measures, of course, are the need of the hour, but what's your sense in terms of the timing and what this means for the company specifically?
Well, I think, these, as you rightly said, these are the bitter pills which we will have to be prepared for. And I think government and most of the ministers have been preparing us through their statements for these kind of action. Of course, this augurs well for these companies. The entire oil marketing and this entire oil sector, the biggest confusion is the subsidy and the subsidy burden sharing. So the shorter the gap between the actual global prices and the domestic prices, the better it is for these companies. So I think, if you talk about the companies concerned, I think it's excellent news. But as far as the Indian inflation is concerned, I think, there is a view that this further fuels the inflation. But the fact is, the government is financing it one way or the other. So whether, it's passed on or not, it's getting built in the economy. And this, of course, put pressure on inflation. But you don't have a choice, so you better pass it on. The signal I think this sends out is that the government will take some stern measures in the budget as well. And they are not even waiting for the budget. Whenever action is necessary, they are going ahead and taking it.
Sandeep, between metals and autos, which is a better group in the medium term?
Well, the kind of move Maruti gave today, the kind of move Tata Motor is set to give in the coming few days, I would go with the auto space, but having said that, the metal space may not be far behind. Yes, as a comparative analysis, I think the auto space is likely to outperform. That is my technical view. But metals, there is no semblance of any weakness where one can say that the metal space is weak and the auto space is looking good. It will be one going up 8 points, another going up 12 points, something like that. So in that sense, as of now, in that sense, I would go with the auto space, specifically at Tata Motors. I think which will emulate Maruti and Mahindra the way they move today. I think in the next 2-3 days, Tata Motors will probably go towards somewhere around 480 to 500.
Satish, what did you make of the rally that we saw in the metal space? Hindalco particularly traded very smartly today after the CLSA upgrade, but you've had the likes of, Tata Steel, SAIL, JSW Steel also, which moved in tandem. Do you think that there's a specific reason as to why Hindalco is outperforming?
On a consolidated basis, Hindalco is extremely leveraged, and therefore part of this move could be due to the fact that there could be a follow-on public issue or a QIP there, and consequently when you see a flurry of reports coming into the marketplace, it's also an indication that some activity of this kind would take place, and they would need to restructure their capital base, and then the volatility and risks of Hindalco does significantly come down. Having said that, Hindalco and Indian aluminium companies are at the lowest quartile in terms of manufacturing costs, and that will continue for them for some time to come. And China is cutting back on its aluminium production, so India could be a beneficiary in that scope.
So there are three factors that we'll really be monitoring. It's going to be the FI action in the cash markets. Lots of movement with respect to individual stocks based on crude oil prices. So has crude topped out, given that it's down something like $3 from the recent highs? And of course, we're going to get in a lot of reaction from brokerages on the auto sales numbers, which were pretty much in tandem with what we were expecting or better than expectations. And Nikunj, what is it that's going to top your list?
Sectoral rotation, Avan. I mean, that's the name of the game. Currently, flows are looking okay. Crude is looking slightly toppy. Geopolitical concerns have not flared up. So somewhere, I guess, markets would continue to rotate. We've seen big sectoral rotation. On a daily basis, more and more sectors are chipping in, and on a daily basis, more and more, money is moving into fresh and new ideas. So I think in this pre-budget environment, I think policy sensitives will rule the headline, but within that group, I think it's sectoral rotation what you need to monitor now.
Speaking of sectoral rotation, you also had all of those oil PSU stocks which were in focus today on the back of news. Satish, what's your sense, of the kind of movement that we've been seeing, and as a sector, how would you approach this space?
Oil PSUs have been smashed considerably because of the oil subsidy ballooning, as well as oil prices remaining stubbornly high. I think it is a volatile sector. We should not forget that oil GRMs are volatile. It's a commodity after all. The second aspect is that this government has been determined in reducing the oil subsidy, and to that extent oil PSUs are positive.
So what's your advice, Satish? Are you advising investors that they are better off giving oil stocks a skip?
No, one shouldn't stay away from this sector because it has the potential to deliver a significant portfolio appreciation as well. But one needs to be cognizant of the risks and the volatility it brings to the portfolio, because what happens is you suddenly have a Libya or you have a Iraq, and the portfolio will go for a toss. So if you're putting 10% into a HP, BP and IOC, you want to be careful. But taking 5% of your portfolio in this basket is okay.
Run us through how you would be looking at the pharma space as a whole. And Sudeep, do you think that the kind of valuations that some of these stocks command are justified?
Absolutely, Avan. I think the pharma story is still unfolding. Yes, the valuation has, in some cases, has reached a level where we feel scared, but we firmly believe that I think the story of Indian pharma has a long way to run. There are excellent companies doing excellent work, which we haven't yet really given value to. And I think the mid-cap pharma space is one area which is really worth taking a hard look at. There are excellent companies, they are available still at a decent valuation. So whether you want to look at, in Ipca Laboratories, whether you want to lolook at Glenmark, Natco Pharma, Alembic Pharma, I think these are all excellent stocks. Yes, you may not expect a 30-40% gain over the next 10-15 days, but if you are planning to hold for a year plus, I think these are the stocks which will give you steady, stable returns.
So Deep, is the Maruti still a buy at 2400 plus? It's gone up quite smartly from the recent low.
Not really, Nikunj. If you recollect, when all this shareholder issue was going on, I was firmly a believer in Maruti and I wanted people to buy, but not at current levels. I think it has shot up significantly. If I have to look at the entire automobile space, I will rather stick to auto ancillaries. I think a whole lot of action is happening in that space, and I would rather buy a Bharat Forge or even Motherson Sumi or Wabco than buying into the automobile companies.
Sandeep, run us through your recommendations and how exactly you would be looking at individual stocks from the auto ancillary space, the likes of Bharat Forge, Motherson Sumi, which has seen a pretty stellar run-up today.
Well, Aman, I would definitely like to go with a Bharat Forge at this point in time than a Motherson Sumi, because it is already moved up. Yes, on a correction, Motherson Sumi makes good sense to buy. And there is still some more upside to the tune of 10 to 15% in the short term. That is a few weeks' time. My recommendations for the day are a buy in a Tata Motors, stop loss of 445, target of 475. And a buy in a Hindalco, stop loss of 169, target of 189.
So auto ancillary seems to be the pet theme with our experts. Sudeep is bullish on Wabco. Sandeep is bullish on Bharat Forge, and Satish, two stocks you've been bullish on. One includes Wabco. So is Wabco still a buy along with Bank of India?
Wabco, I think, is a fundamental long-term buy because the CV cycle will turn around. It's gone up significantly, so probably it needs to consolidate before the next leg of rise takes place. In terms of Bank of India, it is a PSU stock with exposure to corporate India. A lot of that needs to turn around. If it doesn't perform for 3 months, I wouldn't worry. I think the longer term story is intact.
Sandeep, earlier in the day you recommended an FDC. What are you doing with that counter? And another favorite of yours, a Dish TV, saw a pretty smart rally today. What's the call on the charts?
Well, Aman, FDC has given a very clear breakout. It has closed at not a highest point, but almost at the high of the day, and it has made a very positive pattern. I term it as an inverse head and shoulder pattern. So and the volumes have been extraordinarily high for the day. So I would buy it on any corrections at the current closing level and down to 140. I don't think it will go below 136, which could be a good stop loss, and I would ride it all the way to 165 to 170. So very clear 15 to 20% trading upside. Now this is a call for the next few weeks or so, not for the next few days. So I would hold on for that move. Now, as far as Dish TV is concerned, that is also given a very clear breakout at a level of 63. I would take a trading play with a stop loss of a little below 60 and play for a target of 70 to 72. So makes a case for a very clear 10% trading upside again in the next few weeks.
We're identifying some of the top stocks to keep on your radar. First up, let's get a feel as to what the dealing rooms are talking about. We've got Yatin standing by with the list. Yatin.
Tata Global is something that dealers are quite bullish on. Of course, we have the tea and coffee prices which are expected to remain firm in FY15, and they are using Tata Global as a proxy, for these firm prices. Also, if you look at the FNO action, a lot of build up there on the long side. So for the short term, for a 5 to 7% upside, Tata Global is what dealers are recommending their clients for futures trade. Also, watch out for KPR Mills. The stock has run up significantly, mid-cap into the textile sector. HDFC Securities came up with a note today with a target price of 358 rupees per share, almost 100 rupee upside from the current market price. They're expecting that for the next 2 years, that is FY15, 16, 17, the profit growth on a compounded basis will be 21%. At the current market price, very attractively valued at almost 6.5 times. Price to earnings on FY15 basis, and they expect that the stock will do well in the next 1 or 2 quarters, and also surging demand for yarn as well as fabrics will drive the growth for KPR Mills. So this is one stock wherein dealers are taking some short to medium term positions.
Right, Yatin. Thanks a lot for that. Sandeep, how do you propose one should trade tomorrow? I mean, markets are consolidating. You got to be buyer in this market, and for those who are participating, they are making money.
Nikunj, you have to be not only a buyer, but you also have to choose the right stock. If you choose the wrong stock, you will face a lot of frustration. That stock may move sideways or that stock may correct, though you may not lose money. But then if you choose the right stock, something like a Tata Motors, that is what I feel. Hindalco probably maybe a little late because one leg of the move is already coming. So I would not, though I have a buy in a Hindalco, that is as a position trade. So you will have to choose the flavor of the day, and I think that will be clearer in the first hour of the day if you can spot the right pattern. So I think stock specific is the way to go or way to be rather than trading in the Nifty.
Sudeep, take us through, where you are seeing potential for the long term when it comes to the broader markets, because clearly that seems to be where all of the action is. A few stocks that you can highlight which one can buy at the current levels.
Look, I think on the large cap side, we have been extremely bullish on the entire energy space. And number one stock which we are recommending has been Coal India. Excellent potential. I think if one company needs to perform and needs to be, structured, I would rather say that's Coal India, and that's going to happen. It has to happen. So I think it's available at a reasonable price after the correction. I think it's a great buy at current levels. On the other side, we are extremely bullish on agriculture and related sectors, and we believe there has to be a lot of reliefs and a lot of measures in this particular area. Our preferred stock in this is Jain Irrigation and Monsanto. Obvious reason, micro irrigation will definitely get focus in the budget and maybe even after budget, and Monsanto because of the seeds, the space in which they play and where they are the leaders.
Okay. Satish, let's get a closing comment from you as well. Assuming that a structural and we are in the middle of a multi-year bull market, what are classic ideas for long haul?
I think in terms of the long-term stories that one needs to hold in this market would be the classic builder, financier, and material supplier. So if you look at the builder has to be L&T or BHEL. These two would be core portions of your portfolio in the large cap space. The financier would be SBI and to some extent HDFC Bank. The supplier of materials would be Tata Steel, Ultratech. These two people would be the core aspect of the story. Now, we also have to be cautious because post-elections, all of us have started imagining that we are already having autobahns and high-speed railway connecting everybody. It's not yet there, and nor is it even evident that it is going to be there. So let's temper our expectations here and take it as it comes.